All right. Hello, everyone, and welcome to Bitcoin 2020 and beyond. I'm Lou Kerner with Crypto Mondays, coming to you from Greenwich, Connecticut, and we've got a great show for you today. I'll be joined on the call by Mike McGlone, the Senior Commodity Analyst with Bloomberg Intelligence, and with Eli Mizroch, founder and CEO of digital asset manager Silver Castle. Hey, Mike. Hey, Eli.
Hi, guys.
Our panelists, including myself, are going to share our views of Bitcoin and what's going on in the current marketplace today. We'll each do that for about 10 minutes, and then we'll follow that up with about 30 minutes of questions from the audience. So if you're in the audience and have a question, use the Q&A button on Zoom. If we pick your question, we'll let you know via chat. And then we will open up your video and audio, so you'll be able to join the panel, ask the question, and and have a dialogue with us as we answer the questions. We're recording the call today, and we'll be putting it up on YouTube and writing up a blog post of the 5, 7, or 10 things we learned on the Bitcoin 2020 and beyond conference call. And so with that, I'd like to hand it over to Eli. So Eli, let me make you the host. And let's see. Okay, you're now the host and can grab the screen.
Cool. Thank you very much, Lou. And thank you, everybody, for joining. I put together a few slides, and Lou, I hope it's fine. I'm not even sure I'll fill in the entire 10 minutes. I've got a few things that everybody might find interesting, and I'm obviously happy to take as many questions as you'd like. So maybe a few words about Silver Castle, about us. We're, as Lou said, we're a digital assets investment house. And let me just see why. Oh, there we go. And we do a couple of things in that capacity. The first thing we have is an asset management service where we manage some hedge funds and a platform for managing crypto assets, which outside of the US is probably the only truly institutional grade asset management platform out there, fully regulated, fully secured, insured, audited, with administrators and fund managers and all of those good things that we know from traditional asset management companies. That's what we've done and brought that over to crypto. Also, we have AI-based deep learning, high-frequency trading, which we do mainly for our own book, and that's going pretty well. We allow, in addition, we have a platform that allows financial institutions around the globe that are loan-giving institutions. We enable them to give fiat-based loans backed by crypto assets. And finally, I think the fourth thing that we do is that we underwrite and distribute security token offerings and regulated token offerings in Israel and across Europe. And all of this is wrapped up in as close as possible to being a traditional banking and securities and capital markets infrastructure way of doing business, fully regulated and hand in hand with the financial services industry. Here you can see a little bit about our ecosystem. As I said, it's very much institutional grade. All of the partners here are regulated, well-known, both those in the traditional finance space and those that are active in crypto. We're very, very proud of all of these relationships that we have, and this ecosystem that we've built, we feel is unique. And leading up into this call, I think what's worthwhile mentioning is on our asset management side, we have currently 2 hedge funds that we run. The first one takes a momentum-driven strategy, and we'll talk a little bit about that in a second, and applies things that we've been learning in capital markets over the last 30 years, applies them to Bitcoin, and we trade either long or neutral We trade Bitcoin. We've been doing exceptionally well over the last 3 years. And this for investors that are seeking a regulated and safe way to gain Bitcoin exposure by in a managed and strategy based fund, then this is a fund that we've launched and have been managing for a while. And we'll talk maybe a little bit about it later, but one of the things that we're seeing is that a lot of the strategies and the way of doing trading and business in Bitcoin, we can make an analogy to what's been around in capital markets like 20 and 25 years ago, and seeing that those same strategies from way back when are very, very effective today in trading Bitcoin. The second fund that we have is something completely different. It's what we call the Bitcoin 100 fund. It's straight exposure to Bitcoin. So people join the fund, investors join the fund, we buy Bitcoin on their behalf, fully invested in Bitcoin all the time. So it's a really, really easy and safe way to get exposure to Bitcoin. And the only difference between doing it through us and doing it on your own and holding your own Bitcoin is that we're completely safe and 100% insured. And also different to every other hedge fund that we know of in the world, we give an option of physical redemption at the end. So when you want to leave the fund, you can either leave back into dollars, or we will redeem you into a unique wallet that we set up for our investors and redeem you in Bitcoin. So you get physical delivery of Bitcoin. Now, I thought I'd mention the two funds because the basis of our talk today, of our webinar, is, where is Bitcoin going? Is it going anywhere? I think would be the right way of putting it. I think at the beginning of the year or towards the end of Q1, where we were looking forward to the halving of the Bitcoin, and we started seeing the huge and unprecedented impact of COVID-19 on economies and the financial systems. I think a lot of people and a lot of players in the crypto world, and particularly in Bitcoin, were saying to themselves, this is going to be a very exciting and very positive time for Bitcoin. In other examples of crises, we've seen Bitcoin act as a type of digital gold. That hasn't happened in this crisis, and we've seen that a lot of investors who held Bitcoin viewed Bitcoin as almost any other financial asset that they were holding. And in the huge flight to cash that we saw during March, Bitcoin suffered pretty much like all other financial assets. So we didn't see this lack of correlation to financial markets continuing, and Bitcoin definitely didn't play the role of digital gold. And more, I think, moreover, the effect of the halving that happened in May was not as pronounced and as significant as a lot of people thought would be in terms of the impact on the price of Bitcoin. So given that, Bitcoin is down 20% on the year, but up close to 50% this year to date. And we're asking ourselves, where is Bitcoin going? Given the lack of volumes and almost a lack of interest over the last couple of months or even a quarter in Bitcoin, there's a huge question as to where is this going and what is the outlook for Bitcoin. So I've proposed here a type of, let's call it a very, very basic outline of a framework for looking at the different elements that impact the demand and the supply of Bitcoin, and obviously the price. This is very, very simplified, and I'm using this just to help us keep track of the talking points and the points that I'm making. But it might be helpful to try and break down the different aspects of what would be driving the price of Bitcoin. And bottom line, I need to say that before we get into the analysis, bottom line, our view and our investment thesis is basically pretty much all of our signals point to Bitcoin going up in price, volumes and price towards the end of this year and next year. So we in our long position are long. So our long-term or medium and long-term positions are long and are extremely long on Bitcoin. We might be seeing, because of very, very low volumes that we've been experiencing over the past few weeks, we might be seeing drops and even significant drops over the next couple of weeks. But we think the volatility will come back into the market, but overall we'll be seeing a continued and pronounced rise in the price of Bitcoin. And some of the signals or the analysis that is driving this, I think one thing you always need to look at is the supply. We all know about the limited supply of Bitcoin. We think that the costs of mining are going up. The halving happened in May, and I'm not sure, or our investment team is not sure that an entire reflection of the rise in the cost of Bitcoin is reflected together with the risk in the price of Bitcoin. And also, as we know, as we continue going over time, we're seeing the hash rates going up, the difficulty going up. So we think that overall, the cost of mining and generating Bitcoin will be going up. And also, as we're still seeing a lot of coins held in large wallets, but we're also seeing institutional investors that have come in to the space. And although in March we saw a flight to cash, we still, in our analysis, are seeing a lot of significant wallet sizes from institutional investors that are holding onto their coins and are not selling them in the market. And we think that there's been an increase in stickiness or lack of supply or liquidity in the market, which will also keep driving the price up. When we look at the demand side, so we've seen, I think a lot of us have been speaking about and are seeing throughout the year, particularly in Q1 and even a little bit into April, we've been seeing a rise in retail interest, wallets and transactions through by retail investors, which is always a sign for increased demand. This has gone down over the last 6 to 8 weeks, but overall, I think the level of retail interest was a lot higher this year, but also clearly institutional investors are coming in. It's the amount of money coming in through institutional investors for the Bitcoin market is significant. It is still a very, very small little bubble in terms of overall institutional investment, but we are seeing continuously more and more interest, and this interest is being translated into actual demand, and we're seeing institutionals coming in, testing the waters, buying Bitcoin, and this will obviously, as this continues, will drive the price up. They are coming in for a number of reasons, and I think maybe the two major reasons we're seeing now, or major trends that are intriguing to these institutional investors, are decentralized finance and tokenization. Obviously, DeFi is taking off in terms of volumes and interest, and this is very, very positive because it's a new type of model of looking at finance. And in the same sense, so is tokenization. So we're not seeing a lot of tokenization yet, but we're seeing some tokenization in different geographies of the world, and we're seeing more and more interest by established traditional players in tokenization. And the reason that they're interested in this is A, because tokenization is another avenue to raise capital, but B, and more importantly, there's a huge financial innovation inherent in the tokens themselves, in that you hold a financial asset which is highly divisible and programmable. And this has never happened with any financial assets that we've had up to now. And in speaking to a lot of CEOs of asset managers and banks around the world, once they understand the innovation inherent in tokens, they become really interested in it. And we're seeing more and more models emerging for raising capital through tokenization. And we we think that we'll see a big boost, continued boost in DeFi and a big boost in tokenization interest through the latter part of 2020 and heavily into 2021. We're also continuing to see, and this is maybe the last point, what I've put under this catch-all of other, we're continuing to see financial institutions that are entering the market. A lot of them are entering on private blockchains and not decentralized and not Bitcoin, but this is worthwhile mentioning because every financial institution does something on blockchain or in the space eventually, excuse me, eventually will end up buying something through Bitcoin. So we have a continued demand on Bitcoin being the only truly decentralized currency out there. We're seeing continued regulation development around the world. And this is obviously, we think, in terms of generating an asset class here that will be stable and attractive to financial institutions around the world. Regulation and secondary markets are really, really important. And I'm aware of a number of projects, both by regulators and established capital market players that are setting up secondary markets across Europe, Middle East, and Asia, and even some early signs in the States that we think this is very, very important and very positive for crypto as a whole and for Bitcoin in particular, again, because we view Bitcoin as being the ultimate vehicle for on-ramping and off-ramping all types of players into crypto across the board. So our view is, again, I restated, although in the short term we might be seeing dips in the prices, there might even be significant dips in the prices because the market currently is in very, very low volumes. And small amounts of supply or demand can significantly impact the price. Overall, when we're looking towards the end of this year, 2020, and into 2021, we are very, very positive as to the price of Bitcoin and to the level of interest and volumes that we'll see there. I think that's about it for now, Lou. I hope that's fine.
Thank you, Eli. That was terrific. And now, I'll make my comments, try and keep it to about 10 minutes. Actually just going to kind of share a lot of data that I'm looking at that's informing me kind of on where we're at. And let's see. There we go. So just real quick, the macro environment is, everybody knows about. I mean, it's crazy how, we're looking at most countries' GDP being down anywhere from 10 to 20%, although China's still expected to grow a little bit. We're in a 40-year market of yields falling. So while we have economies imploding around the world, one of the major tools that central banks have had to help economies during troubled times, lowering interest rates, that's really not a tool anymore outside of lowering them into negative territory, which obviously has implications that they'd like to stay away from. But it looks like that's where we're going. And at the same time, again, as everybody knows, the central banks are doing what they're doing, and that's printing a lot of money, including the Fed. So that's really the backdrop. And I think most people, certainly including myself, would have thought that was a great backdrop for the price of Bitcoin to be soaring, but obviously it's not. So that's kind of the purpose for the call, really kind of what's going on. And I'm not quite sure. So, real quick, kind of what is Bitcoin? It's a lot of things to a lot of people, a peer-to-peer electronic cash system, although not a lot of people are using it as cash today. It's private, it's seizure resistant, so it has a lot of properties that are really unique. I think most people now realize that it's still a speculative asset. One of the, I think, coolest things about it, or that's compelling things about it, is it's traditionally over long periods of time uncorrelated with other assets. It's inflation resistance, and personally my enthusiasm for it, I really look at it as digital gold. And so, my comments will largely, focus on that aspect of it. If we look at the history of gold, this is a 100-year gold chart. We're right there, and this is a chart's a few days old. So we're touching at the all-time highs. Keep on freezing up. All-time high for gold, and my guess is we're going to reach that in the next few days. Might take a few weeks, but that's definitely the trajectory that we're on. But again, the main purpose that people use gold for is a store of value, as really as an inflation hedge. So rather than looking at it just in terms of dollars, I think it's much more interesting to look at it in terms of inflation adjusted. And if you look at it from there, we're a bit further away from inflation adjusted highs, which were reached in the late 70s during the second oil shock, and when Iran took over the U.S. embassy, and so there was a lot of both financial and political risk around, and that's when people were flocking to gold. And we've seen a pretty significant surge in gold just over the last couple months with the implosion of economies. And so gold is kind of acting, as you think that it would. You can also kind of compare it against the S&P. So this is the S&P over gold. And during the last little bit of time, you can see over here, again, the gold's been acting quite well. If you take a look at the kind of just a few of the macro Bitcoin trends that I want to touch on, first, retail investors are adding Bitcoin. I think one of the best data points that you can get on that is to look at GBTC, which is a fund that trades on the on the NYC, and you can get all it does is hold Bitcoin. It's the easiest way for retail investors to get into Bitcoin. They can buy it from almost any broker that they have. And what's interesting, since the halving, just GBTC alone is buying more Bitcoin than there are being created. So just GBT itself is sopping up an interesting amount of Bitcoin. So I think that's again should be a positive sign, and that's for retail smaller investors. If you take a look at the bigger investors, so this is the number of Bitcoin whales. A whale here is somebody who owns 1,000 or more. And what you've seen is over the last number of months, really since about a year and a half now, the number of whales has been increasing. So the number of people who have more than 1,000 Bitcoin, has been increased. So it's not just small people that are getting into Bitcoin, but it's also people who are investing, at least a minimum today of $9 million. And so again, you would think both of those would be positive for Bitcoin. So why isn't Bitcoin performing better? There are multiple reasons going around. I'm just going to mention a few here. One, Travis Kling, I think one of the smartest guys in the space from Ikigai, has been talking a lot about, all the tokens that are coming on to the market from some of the scams, most notably Plus token. And so there's still some more to go there. And I think certainly at the margin that, has a negative impact. But myself, I don't see that as a big reason, as a major overhang. It's a few $1 billion, which is meaningful, but it's not massive. I actually think the bigger thing that's going on, just from a macro perspective, if you look at the crypto market in total, is the rise of stable coins. And so this is just over the last 4 months. The number, the amount of stablecoin, the market cap of stablecoin, which is dominated by Tether in the green, has more than doubled just in the last 4 months. So it's over $12 billion today in stablecoins. And if you think about one of the main drivers for a long time, the story on Bitcoin, certainly in a lot of the early days was, this is a store of value, which, you need everywhere because of inflation, but but the more inflation there is, the more you need it. And so if you're in countries like Venezuela, which have massive inflation, then Bitcoin's one place where you can store your money. Quite often the governments don't even allow you to hold dollars, so it's a way to circumvent that. But you're obviously accepting a lot of volatility when you're buying Bitcoins. Now that stable coins are so much easier to access, it's quite possible, I think, that you've got selling pressure from Bitcoin holders, who are holding it as a store of value, and are now going for a store of value into stable coins. The other, the blue line, the thicker blue line, a few below the green, that's USDC, which has more than doubled as well, and recently just topped $1 billion. And depending on who you listen to, Masari said that Tether recently surpassed 10 billion. So this is fast-growing markets. Warren Buffett here, he's never said anything positive about, but one of the interesting things is the negative people. He said, Bitcoin is rat poison. The negative people on Bitcoin aren't talking about the real properties of Bitcoin, and there are things about Bitcoin you could say that, are potentially problematic. But none of them even know enough about Bitcoin, I think, to say really smart things about it other than it's rat poison. The dominant crypto narrative today, I think, are, institutions are coming like Paul Tudor Jones. I personally think it's too early, too risky, and too hard for most institutions to come and get involved in crypto. That's why I'm a big fan of what Silver Castle is doing, because they're working with wealthy individuals and institutions to give them a much easier on-ramp into crypto. The rise of stable coins as a fiat on-ramp, is a major narrative today. And while I think that could be part of the part of what's an overhang, I actually think that CBDCs, central bank digital currencies, are the real mass adoption events when governments hand out digital wallets to their citizens. And enable those citizens to use that to buy other cryptocurrencies like Bitcoin. I think that's be extraordinarily positive. Bitcoin is not risk off yet. That's a narrative that's in the market today, and that certainly appears to be true. And as Eli mentioned, DeFi is surging. But that's true, but it's off a small base. So even though it's more than double, it's still just about $2 billion today. As I look out, I don't really have price targets, but if I look out as a potential catalyst in order of, I think, the potential impact, starting with the lowest first, I think, and Eli mentioned this, but favorable regulatory rulings in the US and elsewhere, I think, can have a positive impact on Bitcoin. Institutional investors waking up to Bitcoin don't know what the catalyst for that would be, but certainly they're deep pocketed. This is such a small market, $170 billion in round numbers. Any involvement by major institutional players can have a very positive impact. But as I said, still think we're a ways away from that. I think innovation in Bitcoin, whether it's the Lightning Network, what's going on in DeFi, as we're seeing, WBTC, where you can wrap Bitcoin and get a loan against it, as part of what's going on in DeFi, has potential things like Swan Bitcoin, enabling it easier for small investors to buy Bitcoin. So we could see some potential significant innovation in BTC that has a positive impact. I also think that, where the IPO market all of a sudden got incredibly hot. And so I think if a major crypto company like Coinbase were to go public, that could drive a lot of additional interest into how do you get involved in this new hot market that people are ignoring. And as I've already mentioned, I think the biggest impact is the potential catalyst is the introduction of a central bank digital coin, whether that's in China or elsewhere around the world. So those are my thoughts on Bitcoin. And with that, I will, hand it over now to Mike. So Mike,
hello, can you hear me?
Yeah, I can hear you. So I know you're just going to be audio. So I just made you the host.
Okay.
So share your screen now.
Okay, I'm sharing screen now. And I'm showing you my, I'm going to just give you my latest outlook from that I share. And the key point is Bitcoin,
Hey, Mike,
Uh,
we're having a lot of trouble hearing you. You're cutting in and out.
how about now? Is this any better?
Yeah, that's
Can you
better.
hear me?
Yeah.
Okay, 'cause I minimized some other things. So I'm just giving you my outlook. You have a problem? Wait. No.
Okay, Mike. Now we are not hearing you at all. Um,
Yeah.
you can actually dial into the call. That might be an easier way for you. Yeah, if you stop sharing your screen as well, that could be easier if you wanted to kind of walk through what you were going to say.
How are we
You want
doing
to
now?
Now I can hear you better.
Okay, we'll just forget the share screen and do audio. I'm traveling this week. And I've been on vacation, and so I'm only on my mobile hotspot. So sorry if that was a problem. Can you hear me all right?
Yeah, I can hear you better now. And Ellie, if you shut your video too, maybe
Okay, so
less streaming.
one thing I want to address is the things one issue we all agree,
And
which
Mike,
I guess is good.
I would shut your video. And by the way, we can
Yeah, we'll start
overlay
with
the slides later on.
Okay.
On
So
YouTube.
there's there's few things that brought up, like you brought up GBTC and CBDCs. I love putting those together because they can be confusing. And the significance, I think, of GBTC is, as you pointed out, it's the most widely tracked on exchange measure of really what's happening with institutions, and not so much institution retail and institutions, but in the ETP space. And the thing about it is, it's running around you mentioned how much it's absorbing of total supply. I look at it as just basically taking most of the supply now, but it's basically almost 2.5% of total Bitcoin supply. A couple of years ago, it was only 1.5% or less than 1. So the point is, you look at the assets under management in terms of GBTC, in terms of Bitcoin, it's close to, last I checked, it was getting close to 400,000 Bitcoins. And we know where that trend is from the lower left to the upper right. So demand, I see, is clearly quite strong for Bitcoin. So first thing I like to measure is, look at the entire market, but you look at Bitcoin, it's 65% of all cryptos. The next largest, Ethereum, is 1/7 the market cap, so it should get 1/7 of my attention in this macro environment that we both discussed. It's all about Bitcoin. So up almost 30% in the year. I think it's performing quite well. But just look at the key thing I look at is, as Ellie mentioned, and you did a little bit, Lewis. There's first of all supply. There's, from a commodity strategist standpoint, it's guaranteed via code that Bitcoin supply is dropping exponentially. It's dropping in a linear pattern. For instance, this year was around 2%. Next year it's going to be below 2%, and it's going to go down, straight down in a linear fashion for 100 years. And that, to me, is significant. That means there's only one thing that matters, and that's demand and adoption. And so that's why I like to focus on the key metrics for demand. Obviously, what's the demand that I can see that's the most transparent? And you see this from ETPs. Good example has been, I've been very bullish on gold for a number of years, and partly because I can see the demand, the transparent demand from ETPs. So GBT is similar. It's the top. It's the biggest one space. So there's one key demand indicator. Another one is, let's look at on-chain things. And one of the best relators, highest correlated metrics has been addresses used. And addresses used, I like to overlay the 30-day average I get from Coinmetrics, and it's equivalent now, if you use an auto-scale basis, to about where Bitcoin was around last time, when it was around 13,000. And it was a key indicator that kept me very bearish 2018. I did not make a lot of friends in the space, but that's one thing about what I do, is I'm very unique in this space. I'm completely objective. I'm published on Bloomberg, and my main purpose is getting it right. I don't have any vested interest, and if I don't get it right, I'm eventually not going to last long. So that's a key another indicator. And the final one I really like to watch is futures. Now, futures, and I mean futures that trade on listed exchange. Listed is very important because that's part of the on-ramp. It means the more you see open interest in futures increasing, even in this, as Ellie mentioned, this very low volatility, which means very low volume environment. Futures open interest is clearly moving from the lower left to the upper right. It recently reached an all-time new high around 50,000. It's pulled back. That's 50,000 Bitcoin equivalents. But it's the key. It's a key on-ramp to indication that eventually there's going to be an ETF in this space. Why? Because the biggest problem with the SEC and futures has been lack of regulated exchanges, and futures are regulated by the Commodity Futures Trading Commission. So I look at that, and most of my demand indicators are positive. So I see, yeah, okay. Ali mentioned that Bitcoin could correct. It's very volatile market. It's nascent. Could drop to 5,000. I hope it doesn't. But to me, the next thing that Bitcoin is really supposed to do is pop up to around 12, 13,000. And this period now, as us market veterans know, is the best sometimes, that you have to get a period of good amount of disdain before you can really get a market to move, i.e. gold peaked in 2011. It stayed down. It didn't really start inching higher until year. It was a pretty long period, at least 5 years. It didn't break above 1,400. And Ali mentioned gold a lot. Lou, you mentioned gold a lot. And to me, that's what Bitcoin's doing. It's just trading much like gold. So Lou, view gold as leading indicator. It's right about, another 8-year high today, around $1,800 an ounce in terms of dollars. Now you look at gold, as we mentioned, other currencies, it's already made all-time new highs. So it's just a matter of time for gold, and Bitcoin's following in this case. The significance is looking at different indicators for Bitcoin, and that's volatility. Bitcoin volatility is in decline. 30-day volatility is near its lowest ever. I mean, the lowest was around 20%. It's around 30% now. And typically what that means when Bitcoin volatility gets really low, it usually breaks out with price going higher. So the way I see Bitcoin is something really wrong has to happen for it not to do what it's been doing for the last 10 years, and that's go higher. And part of the reason is it's had a pretty good period of disdain. It's well off its highs. Right now, 50% below the high, more than 50% of a high of around 20 grand. Similar to gold, and similar to, when it's time to buy stocks, when they get a decent period of disdain. So that's why I view Bitcoin as just a matter of time to break out. And the longer it kind of creates frustration in space, to me, the better. Those of us who've had our faces ripped off by markets and know you just be careful trading and look at just an asset has limited supply, increasing adoption, and it's increasingly become a collectible. You should just collect it and not mess with it, and don't even think about it. And if we're asked if your total investment goes to zero, you should not have that much in it. But I view Bitcoin as just a matter of time. And then another key thing is you look at the digital age. We're all rapidly advancing into digitalization, unless you expect that to go backwards. And rapidly advancing technology to stop and reverse, then you should expect things like digitalization, Bitcoin, CBDCs, just a matter of time. I mean, we don't use paper money anymore. I've been traveling a lot, and no one wants to touch paper. And there's no reason that someone in between our money and the merchants should be getting 2 to 3%, i.e. credit cards. So it's just a matter of time, I think, with CBDCs. And Bitcoin is the gold in that space. So I think that's enough from me. I will pass it on to you for any Q&A. And I'm sorry I've had my little connection issue. I'm away from home. I don't have Wi-Fi. I'm with my parents. I'm in Princeton, Illinois. And so I'm kind of checking out the crops. And so I'm just on my mobile hotspot at the moment. They don't have Wi-Fi. They're very old school.
Ah, okay. That's funny. Just one thing I just want to follow up on, Mike, that you said that I actually was a narrative that I hadn't heard before. When you said that people should think of it like a collectible. When you think of it in that light, are there any other kind of collectibles that you can compare Bitcoin to?
Well, the most likely, the precious metals. Take silver out. You can produce a lot of silver when you need to. All you need is higher prices. And I view it much closely, obviously related to gold. The thing is, we all know if you get gold to double in value or to just go up, there's a lot of mines in this planet that have been, that are not really income producing, but you get gold around $2,000, $3,000 an ounce, and there's going to be plenty of incentive to bring that gold back online. That is just something I've never seen before in something like Bitcoin, because you just cannot produce more supply. Yes, there's forks and things, but those forks aren't Bitcoin. So that's why I view this, there's 900 coins or so that are produced today. There used to be 1,800 just a few months ago. and that's going to be at some point 450 in the next 4 years is just significant. So the only thing that matters, unless something I can't predict happens, is adoption. And that's why I did a bit on this a little while ago. I cut Bitcoin, and I said, Satoshi, created something wonderful, but it's not peer-to-peer cash. For me, it's just not that easy to do. But I think I use the term mistake just to kind of get people's ear up a little bit. And the point was he created gold, digital gold, and for the digital world, and it's really kicking it out. It should.
Wow. Okay. Thanks, Mike. That was helpful. Now we're going to go to the Q&A session of the call. If you've got a question, put it in the Q&A chat box on Zoom. And for the first questions, I said we'll make you a panelist, so you can turn on your audio and video. And our first question is coming from David McIntyre. Dave?
Hi, can you hear me?
Yeah, I can hear you. You're welcome to.
Oh, great. Sure. Like. Yeah, I'm just getting started as a digital currency investor, and I work for one of the tech companies, so I've been focusing on building up the infrastructure for mining these different coins, but now I actually want to put some skin in the game too. So just getting started in as a collectible or as an alternative investment, what would you suggest? Going through one of the exchanges or going with one of the tier one brokerage houses? What would you recommend there?
Ellie, do you want to start off taking that, given I think that's kind of teed up for you?
Yeah, sure. I'll give you my view. I think getting into the digital asset space and holding the actual asset, let's say you want to invest in Bitcoin and buy Bitcoin, requires a pretty high level of knowledge and sophistication. You need to understand about wallets, and you need to be pretty careful about where you buy your coins from to ensure that you get clean and checked coins. And you need to be aware of how to calculate the spread that you're buying at, the actual fees that you're buying Bitcoin through. And my view is that investors that are not prepared or haven't spent the effort and the time and the investment in figuring out the rules of engagement in crypto and in Bitcoin are going to get the short end of the stick. So I would recommend one of two things. If you're serious about this and you see yourself investing significant sums of money, then do the homework, get up to date on everything, and keep up to date. And if not, there's some really, really good asset managers and brokers around the world. I mean, if you're from the States, there's some great companies there. And if you're in Europe or Israel, there are companies like us. So we pretty much take the hassle and a lot of the risk out of what you would be doing on your own as an investor. And there are a lot of products out there that allow you to get the exact level of exposure that you would like, without actually taking the risk and setting up your own infrastructure. And often, even with management fees, you'll probably end up getting a better deal going through one of the brokerages or the asset managers than doing it on your own. So I think it's a long answer to a short question, but that's pretty much the best I have there.
I guess what I'm thinking about is just looking through options of, well, one, should I just buy a number of Bitcoins, or look for a fund that has more of a blend with Ethereum, perhaps some stable coins, maybe even some of the Raven coins and Litecoins and the like. And then should I approach a tier one brokerage that maybe has a portfolio fund, or go directly to a Coinbase and purchase that way on my own?
Yeah, I mean, I would just say, there are pluses and minuses to all of those. It's tough to answer quickly. I would just say for Bitcoin itself, I think the easiest way, you can go to a Coinbase. It's a pretty easy way to get those. The fees for doing that are not insignificant. GBTC, the fund, is another very easy way to get it. Again, the fees there are not insignificant. Both on an annual basis, the fees that they charge. In addition, interestingly, on average, for every $100 worth of Bitcoin they have, it averages about $120 when you buy it. But as long as that stays consistent, that's actually not really a cost, and that could actually grow, but that creates just a little more risk. And certainly then, to get a diversified portfolio of these assets, there's some interesting things that are now popping up in DeFi that can get you different baskets of coins that are managed by different folks. eToro has a product. I think the person who's or at least one person I know who's widely followed there is Maddie Greenspan, I think one of the smarter folks in the space. So before we move on to the next question, Mike, is there anything that you wanted to add to that? Your mic, you got to turn on your mic.
Yeah, I knew that. Sorry about that. No, I'm good. That's I better stay away from that one for compliance.
Okay, great. And so, for the next question or comment, Tom Lombardi, Tom, if you want to unmute your microphone, if you can, there you go. And if you have a question or
hey guys,
Tom is also, a very sophisticated digital asset guy. So, also happy for any comments you might have on anything that we've said.
yeah, sure. I mean, all really insightful stuff. The one thing I've been thinking about a lot is, derivatives markets are very large. It's an excellent way for institutional investors to get exposure. You can minimize your custody at risk by only posting a smaller amount than the exposure that you get. So I think that that's going to continue to be a theme that's not really publicized, but I'm just baffled by the sanguine type volatility that's happening, or lack thereof volatility in the market right now. I mean, we're seeing in the equity markets, we're seeing a lot of correlation between Bitcoin and the equity markets. I know that ebbs and flows, but right now it's flowing towards a higher correlation. Some of these things are contrary to a lot of the things we talk about in Bitcoin, right? As a uncorrelated asset, as a, volatility as a feature. Some of these things are maybe not breaking down, but certainly in question. And so, I keep my eye on volatility. Skew has a lot of really good data. So I track that. And then, there's also, I think this was discussed on the call as well, around investment vehicles. So things like GBTC as exposure to Bitcoin. Yes, it has a lot of cons. To the easy pro is you dial up Robinhood, you throw your dart. The con is, you're paying a premium, you're paying fees, their tracking has not always been one-to-one. They questions about how they manage their private placement to the secondary trading. So, but really that's what we're left with. And that's sort of working right now. So I struggle with a lot of the competitive products as a really clear, like, give me that 10x improvement, right? We get back to like Peter Thiel's, what's it, 0 to 10? What is the 10x improvement to an investment product? And that's really what I'm looking for. So lastly, if I could just plug, I just wrote a piece on Medium about a primer on Bitcoin funds. So it covers Grayscale's GBTC, covers CoinShares and other vehicles, something that's been jogging around in my head.
Okay, cool. Well, thanks for those comments, Tom.
Great.
Appreciate
Thanks,
it.
Lou.
You're welcome to stay as a panelist. Our next question comes from Bruce Adams. So Bruce, if you want to unmute your microphone, and you're welcome to open up your video as well if you'd like. Bruce? Going once.
Hi there. Yeah, thanks. Thanks everybody for the great presentation. I appreciate it. My question was, are we seeing more or less adoption in developing countries of using crypto and Bitcoin? In particular, I hear about the need for people potentially in Venezuela, Brazil, Argentina, and clearly other third world countries. So do you have some thoughts on that?
So Mike, you want to start with that? Unmute your mic.
Unmuted. Yeah, well, to me, that's the key thing. A lot of the talk I've been hearing lately is Lebanon. I mean, and to me, that's the old guard stories we've all heard in history of, using gold and other precious metals to hold your wealth. And, you still find these hoards in England from the Roman times. I love going to the British Museum and seeing the Hoxie hoard and things like that. But come on, this is modern digital time. You can put your wealth on a thumb drive, and there's every incentive to at least have some form of diversification. And one thing is, regardless you love it or hate it, Bitcoin's won that space. It's got the depth, and once market gains depth and gains liquidity it's won. I mean, you want to mess around with Ethereum, it's 1/7 the size of Bitcoin. So to me, that's the key thing. It's every country in the world that's not dollar-based, maybe the euro, even the dollar. I mean, it's just taking that piece of paper, and certainly in countries that have more dicey currencies, you're going to want to diversify. So to me, that's a big part of it. And Lebanon's just a country I've heard a lot lately. I used to work for a Lebanese guy. Wonderful people, very successful, and unfortunately, their whole government screwed up. So to me, that's a big part of Bitcoin. It's global. And for us, me being a Yank, I like what Wences-Caseros says. For Americans, money's like water is to a fish. But Bitcoin's a savior in a lot of other places in the world. I can stop there.
Yeah, Wences is certainly one of the smartest guys in the space. Ellie, I don't know if you wanted to follow up on anything on that as well. And also, being in Israel, I know at one point Israel was really crypto crazy, but I know that's evolved as well.
Yeah, sure. I don't have any numbers around Venezuela or Argentina and even Lebanon, but I'm hearing a lot of the same things. I think pretty much as was said before, I think I would add one other issue to it, and that's the level of liquidity and the ability to on-ramp and off-ramp from crypto in those countries. So we're seeing huge arbitrage opportunities. The price of Bitcoin in Venezuela is higher than the price of Bitcoin in the States or in Israel, but you can't buy any Bitcoin there. It's all and you definitely can't exchange it and so on. In Israel, we've been seeing a lot of interest, specifically in our fund, the Bitcoin 100 fund that I mentioned before. Ultra high net worth individuals, really, really rich people that are worried about, the banking system and financial instability and so on, are saying, I want to hold Bitcoin. I'm not sure if I leave Israel, if I'll be able to get my money out of Israel. I'm sure that's a concern in other countries as well. And we've seen quite an interesting level of demand from that aspect.
And when you're talking with somebody like that, you make a recommendation in terms of the percentage of wealth that they might want to consider putting into Bitcoin?
Well, I think there's two different questions. One is, if you want to ensure that you have liquidity, if you flee the country and end up being in New Zealand and you can't get your money out of the bank, then then you need to speak to the person about how much money you spend a month and make sure you have enough money for a year. But when we're looking at portfolio building, then yeah, we definitely do, and we have a really interesting analysis. I think other asset managers have as well, of what is a 1% or 1.5% holding of Bitcoin in a typically balanced portfolio do, and the addition of risk is almost negligible, and the addition of performance for the portfolio is tremendous. So we try and get these investors to look at doing anywhere between 0.5% to 1.5% of their portfolio.
Tom, did you have anything to add to what's going on in countries like Lebanon or Venezuela?
Yeah, I don't. I'm not close enough to really opine. I mean, I definitely see. I see see this is the problem with crypto, even from the early days. You see a solution, but you're not really sure what the problem is. These areas do present problems that, you know, will liberate humans around the world. You know, I'm just not close enough to really see those, and, you know, find those exact situations where it can be deployed. You know, I guess I come back to, you know, really, I mean, I've really latched on to the themes around digital gold, and less about transactions. I mean, you guys talked about stable coins, you know, CBDCs, all the things happen around DeFi. And I mean, you know, again, Venmo, PayPal, those things are super easy for US developed worlds. So I've spent less time focusing on that thesis, but I mean, digital gold is front and center. And I think just, you know, I focus on that narrative. And I think as we're seeing new entrants and, you know, guys like Paul Tudor Jones kind of step in, and yes, we probably abuse that reference, but that digital gold and the advantages to physical gold, especially in the world of money printer go burr. I mean, eventually it has to come to fruition, right? I think it's just, it'll likely be a lot longer than what people think, because we're in this deflationary type environment. So yeah, I mean, I would love to travel the world again and get back to Asia and, you know, Africa, but turns out I'm spending a lot of time in my garage in Santa Monica.
Well, there are worse places to be than there, I'm sure. So great. So we're at the top of the hour. I'd like to thank Mike and Ellie and Tom as well. I thought it was a super interesting call. And, you know, it'll be up on YouTube by tomorrow, and the blog post will be written by the weekend. Thanks, everybody.
Thanks, Lou.
Thanks for having me, Lou. It's Mike.
See you, Mike. See you, Ellie.